Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and U.S. economy space. And as you guys can tell from today's title, you better sell your Bitcoin and sell your Ethereum and get out of your digital assets because we're going to zero, y'all. I'm sorry to break it to you. No, I'm just kidding. But we will be talking about that slight pullback that we had today and what possibly could have caused that and what stage we are in the market for this month. So if you guys enjoyed today's content, go ahead and drop a like below and subscribe. That way you can stay up to date with all of my most recent videos. But let's go ahead and jump into CoinMarketCap so y'all can see what I'm talking about. Because as you see here, we have a nice pullback of 3 to 4%, with some of other tokens who had a higher pump having a much higher pullback, obviously. And what could be possibly, the reason for some of this pullbacks is I do think we are just in a nice euphoric state, because as you can see here with CBBI, we did tick down to 17. We are having a rough pullback, but we have been shooting up since the start of the year. And as y'all know, when we do start shooting up, we get into this euphoria, which typically brings out these scam coins, some of these rug pulls. They like to feed on these people's FOMO that are entering in the markets after seeing these huge green candles for, the last, I would say, 6 weeks or so. And you can tell just by some of these news, unrelated base token jumped 250% after Coinbase starts a layer 2 network. So you can tell right now we're just at the stage of anyone's trying to throw money in a coin that just has any relation. And it doesn't stop here, but because you can see it's also with ChatGPT and being AI. There have been tokens that haven't had anything to do with ChatGPT or being AI, and those coins are pumping right now. You know, they've done this back with Squid Games, monkeypox, and even when the Queen Elizabeth passed, people were trying to put out all these fake tokens just to get the social sentiment brewing to get these 10x's, because these are, as you can see here, very small market caps, 1 million, so it doesn't take much to get it pumping all that much. So a peak trading volume of 566,000 just for a million market cap coin, well, no wonder it's pumping. And I also want to go ahead and pull this chart up for y'all, because I think it's worth noting that February isn't Bitcoin's best green month. Now, it is a green month indeed for Bitcoin throughout its history, but as you can see, it's kind of just like a staying steady phase. We're getting a 20% to 11, 10% pump, but past months you see here, January 30, 29, 50, 66, November 453, 63, October you have 222, 54. February is just kind of that month where you see Bitcoin either kind of peaking out, cooling off, consolidating, letting some of those moving averages catch up to it. And I think that's exactly where we are, because as you guys could tell just from those in the euphoria of the social sentiment, we are kind of trending higher in those areas just with a straight peak like that. So there's another reason we could also be looking at this downside, because there is kind of a mix of things. And if you guys did pay attention today, the FOMC kind of hinted that we might be getting a 50 basis point hike, because if y'all remember in my video about 2 weeks ago, we said one of the possibilities that could happen that would lead to a 50 basis point hike is if we do see a very strong job report and possibly inflation start kicking back up again. And what did we see? Well, we saw both of those. So they did kind of hint that we might see a 50 basis point hike, because as you can see here, service inflation does continue to increase even though those goods are cooling off. So they are suspicious that that is going to come. And you can see this with the CME tool, because if y'all remember when I showed you this a video or two ago, which if y'all don't know, I'll go ahead and link it in the description below. This was in the 80s and 90s once the meeting happened in January. The week after that meeting, it was damn near 90% that we were going to get to 25%. And as you see here, we are slowly slipping and it's slowly getting back to that 50-50. So I urge y'all to continue to keep up with that. We won't have the release of the interest rate hikes until March 22nd, so about a month away. But I think it is worth noting and keeping up with because, as you can tell, all of the markets reacted to it. You can see here that we had Dow, S&P, Nasdaq, stocks were down 1-2%, and as well as just crypto from that news is down. And if you go and pull up some precious metals as well, precious metals have also been slipping, as you can see here. So every risk asset, store value, does look like it is falling right now because it looks like every market is getting rejected off of some level of resistance, whether the S&P has that local high, Bitcoin is getting rejected off of its past local high from the FTX prior to the FTX drop. So I do think it is important to note of all of that because we are in what looks as a stage of euphoria, because if we just take it from the top, we ran up 50%. So the correction was overdue, you could argue. So let's go ahead and jump into a little TA action because as you guys see here, Head and Shoulders could be potentially forming. Now it would be some time until it does, but if this does drop all the way back down and then has a nice little shoulder, we could see that correction going further. And I think that 21,000 level is important to watch because if we can hold this level, I think it will be good news and we will go up and retest that 25k in the short term. But ultimately, if we do fall below that 21, I think we could ultimately see another 17.5. And I think that's a healthy correction. By no means do I think we are actually going to zero like I said at the beginning of the video. I just think we do have a correction to come. Now, I also want to highlight that 21,000 mark and the 50-day moving average. So the 50-day moving average, as you can see, once we are kind of in those reversal trends in a bear market, we do start using it as support. So if we do retest this as support like we did in the past, that could be a bullish sign to come, that we would even have more momentum to break through that 25,000 mark. Now, what also could be feeding into this retracement is we did have a rejection off of that 50-day moving average. So that is obviously one of the reasons why people use these moving averages as just an indicator of, oh, I'm going to have a sell signal here, I'm going to take some profits there, which is not, unusual to see in these markets, because I would hope after a 50% run up, y'all were taking profits. That would be the smart thing to do. And you can see that exactly with the stablecoin dominance. We've been noticing that they are crashing and finding a bottom, like we've mentioned in my past videos. Let's go ahead and go on a lower time frame. Like in some of my past videos I've mentioned, we have been going through and crashing and hitting new local lows on this dominance, but as you can see here, we are having a slight support jump off of one of these lows. So it's good to see that the money isn't necessarily moving out of the space, it's just taking some profits going into this USDC, because those more veteran investors, the whales, they understand that a 50% pump is not sustainable. So there's also one other thing I do want to show y'all, and it is that volume profile, because I do think that's a good indicator as well of where we could possibly go, because Bitcoin does like going back to its peaks. So as you can see here, another one of its peaks is at that 21,200 range, and currently we are sitting at the top of one right now. So if we do ultimately start rolling down this hill, I could see us having some, support, like I said, in that 21, but also right around here in that 21.8 range. So you could see us bouncing around in between that level for a little bit, ultimately before Bitcoin decides whether it wants to fall down more, filling in that CME gap that we've been paying attention to a lot, or ultimately bouncing up, deciding we're smashing through the 25,000 mark and hitting our head around the 34,000, where there's ultimately two CME gaps ahead of us. And if you look at the volume profile index, there's really nothing stopping us from those levels, getting up to that level. Let me see. I'll just go ahead and give you the max view for this so y'all can see what I am talking about, because ultimately, and then let's go ahead and get this to 200 so you can see all of them. Sorry about that. 200. Well, that's not what was supposed to happen. Sorry. Gross. No, 200. You're not going to let me do 200? Oh, I guess they're not going to let me do 200. So we'll do 150. Oh, I guess I can't do... Is the max 100 now? I guess the max is 100 now. Well, sorry about that. So the max is 100 now, unfortunately. But as you can see here, we don't have anything really above us until that 30,000 range. So that's what I wanted to highlight for y'all with that volume profile index. So I hope that did answer some of y'all's questions on where is Bitcoin going, why did we have that pullback today. So just be careful while y'all are exploring some of those tokens. Just because it says base, just because it says ChatGPT doesn't mean it's actually part of the company, or doesn't mean it's part of the technology. This is a sign of euphoria, so be careful for that bigger pullback later, because when you do see a round top like this, it is not the best of signs. If you just go right here, you can see that was happening towards the end of the rally in 2021. But I hope you guys did enjoy today's content today. Please drop a like below and subscribe so you can stay up to date with all of my most recent videos. But stay safe out there. Bye-bye.